This is Daybreak Asia. We're counting down to Asia's major market opens. And Heidi, at the start of the session today, that focus is coming down to what we're seeing in the bond spaces, because what a whipsaw trading start to the year. You've got those bonds that started to rebound in the prior session here after we had that sell-off to end the week and also to start this one here. And the focus as well on Chinese stocks, what happens there?
Yeah, and whether we could potentially see this kind of, bets on China, and whether a stabilisation could bolster broader risk appetite across the rest of the session and rest of the region, right? But it is really, the bounce back from that sell-off, when we see a little bit of a pullback in the US dollar as well that we're seeing in the session.
Yeah, something to closely track, of course, as Japan comes online here. Just taking a look at what's happening with the Japanese yen, for instance. We're back down just fractionally closer to 147 there. Stocks-wise, we're coming online with a bit of weakness here, so not quite tracking the US session because it was that rebound we had into the close. But certainly traders really thinking and paying close attention to what we're hearing from Fed officials. And overwhelmingly, this chorus is saying that they're not looking to cut rates anytime soon. Of course, for investors that are taking longer-term bets, yes, the direction here is that rates will eventually move downward. Whether that's March or not, perhaps not too much of a concern. But let's change on, take a look at the start of trade for Korea today. Likewise, in the session, you are seeing stocks just moving fractionally, actually to the upside a little bit. The Korean won here, to note, it's fairly steady so far, but we did have that current account data coming out in the last hour, and we actually saw them logging a surplus for the 8th straight month, and that's on the back of an increased trade surplus, increased dividends that we're seeing as well from overseas, so something that could help boost the Korean won somewhat. And we're also continuing to track that company or currency rather. Yesterday it was that story of further internationalization, given they had the experiment or trial of expanding the trading hours to local currency to 2 a.m. local time. Heidi.
And we are continuing, as you say, to kind of watch for the central bank effect, right? This is a picture as we see an hour of trading now under the belt when it comes to Sydney. We're seeing about 0.7% there. And it was a kind of a mixed message from the RBA's Governor Bullock yesterday with the first of the revamped communications regime, with the press conference as well. Some of her comments could adequately be interpreted as being a little bit more hawkish, but certainly keeping the door open to the need for further cuts. But Bloomberg Economics seeing them as being pretty well done at this point. The Aussie dollar at 65.28. We saw really the US dollar after the big surge, actually the highest since November, pulling back from that 12-week high as we saw yield slipping there as well. So coming back from that strongest level in 2 months with that retreat in Treasury yields, some of that earlier weakness across US banking shares weighing there as well. Also watching crude at the moment, we are seeing New York crude marginally higher. We had US crude stockpiles reported by the API seeing an increase last week. There are some of those long bets, though, being cut by oil traders on these concerns over the rate retrenchment by the Fed, as well as ongoing concerns over what we see out of the demand side for Asia as well. Take a look at treasuries at the moment. And, as, of course, we continue to react to Fed speak, we're hearing from Philadelphia Fed President Patrick Harker in the text of a speech at the moment saying that data pointing to continued disinflation and labour market rebalancing in the United States. He sees a soft landing in sight, and he's optimistic that the Fed can achieve that. Also commenting that the recent PCE inflation data highlights ongoing progress is being made. Not commenting on the outlook for rates, but certainly it adds to what we heard from Cleveland Fed President Loretta Mester overnight, saying that policymakers will probably become more confident in cutting interest rates later this year if the economy continues to evolve as expected. On the demand side, we had a pretty good reception for the first of this week's 3 Treasury note and bond auctions that sort of settled the outlook for what we're gearing up for, that biggest ever 10-year on Wednesday. Let's get to our next guest, who actually sees Asian markets being reasonably attractive, led by China. Let's bring Lorraine Tan, who's a Director of Asia Equity Research at Morningstar. Lorraine, great to have you with us. And this is a bit of a refreshing view. In what ways are you constructive and feeling a bit bolder on China than, well, just about everyone else that we've spoken to?
Yeah, so if you look at things from a fundamental sort of free cash flow generating perspective, yes, based on to our fair value estimates, China is pretty much discounted. And I actually do think the market does understand that, but the concerns obviously are on the geopolitical front and the regulatory front. So the way that we would play China would obviously try to limit those risks as much as possible.
In particular, you talk about some of the kind of moat names for China as being selectively interesting. Is this on the back of perhaps more confidence in the consumer?
Yeah, so I think what we need to do is that there's obviously a few key elements or drivers this year that we see. One is falling global interest rates that should be positive for most sectors. And then we've got, the hope or the belief that the consumer in China is going to become more confident. And that could come from, finally a slew of measures that intensify and help to support, a clear sort of floor to property sales and prices in China. So if that comes through, we do think that consumer sentiment should get a boost. And that would lift, some of the sectors, like particularly consumer cyclicals, for example, upward. I think a lot of these concerns are reflected in current valuations. So that's one of the plays that we would look at. But we do note that, the investors' appetite have to be willing to sort of sit through at least the next 6 months. And of course, the last thing is geopolitics, and this is unknown. We are in an election year in the States, so the rhetoric against China is sure to be, it's probably a given. So we'll need to sort of avoid some of the companies that are more sensitive or have more activity exposure to the U.S.
Lorraine, I just want to bring viewers up to speed with a breaking news headline that's crossing the terminal here. That's New York Community Bank being cut to junk by Moody's. We actually had seen that lender on a review for a downgrade from Moody's, but essentially the bank is bracing for stiffer regulation. It's had deals that's lifted its assets above $100 billion, and particularly its purchase last year of Signature Bank's deposits and some of its loans, the concerns around that, as well as potential weakness in office and multifamily property markets. So quite a concern there for the regional lenders. Lorraine, I'm curious, last year we had that regional banking crisis in the US, and it really did send shockwaves or potential shockwaves globally. Do you think we've seen the worst of that? Is that something you continue to track and see any sort of bearing on this part of the world as well?
Yeah, I think there's a little bit of a known factor now, and I think we do anticipate, it has been anticipated that weakness is more or less concentrated to smaller, more sort of regional banks. So in that regard, I think it's risks that should be more, you should see a little bit less of a reaction this time around because of that. I think but we do need to be mindful of even Asian banks that could have access to, or basically exposure to, global property risks. And, these are commercial property exposures in the U.S., for example. So that's a particularly weak area to watch out for. I don't think it's going to sink any of the Asian banks, but certainly it may sort of come in as a risk factor in terms of their credit costs.
Yeah, Azora in Japan, one that we've watched really closely in that regard, given its exposure to commercial real estate in the US. But in terms of the areas that you're more positive on, what are your conviction ideas and any names that are standing out to you in particular?
Yeah, so one of the things that we began to see in the fourth quarter last year is the turnaround in the basically the optimism for the tech, the chip cycle to turn upward. We've basically been seeing the inventory cycle sort of be stabilized. So we do still like TSMC and Taiyo Yuden as those plays. Both are MOTI companies, and so leaders in their, a couple of leaders in their areas. We also do like, because of a similar sort of trend, to increase capex to be coming through to the semiconductor names as well. So we do like the factory automation space, and the leader here would be Fanuc. The other area, as I mentioned, is the domestic consumer names in China, and we do have a preference for heavily sold down quality, what we call MODI names. as well as A shares. So the Baijiu segment is an area that we like. Wuliangye, Yuzhou Laojiao, and also Anta Sports for that reason.
All right, Lorraine Tan there, Director of Asia Equity Research at Morningstar. And we are just about 10 minutes into the session so far, drawing your attention to some of the movers that we're tracking. And one in particular is standing out to us here. That's Mitsubishi. You can see it actually is traded at this point, if we can remove that strap. But essentially, we're seeing it jumping here. We had ADRs as well, up around 11%. But the Japanese trading company has announced a share buyback of 500 billion yen. It's also reported net income for the third quarter that beat the average analyst estimate. So something that we're tracking very closely here. Nintendo, another name in focus here. It's lifted its profit and its outlook for the Switch console. So, again, we are seeing some moves here to the upside for that name. One, of course, that we track just in terms of general exposure to tech companies in this part of the region. And we did see ADRs, likewise, gaining around 4%. So we'll see perhaps some further upside. Let's switch on because automakers in focus. Yesterday, we had Toyota reporting, but that was during or in the lunch break of Japan. We did, though, see shares rising into the afternoon session, and we actually saw Toyota, its market value topping 50 trillion yen for the first time. We've also seen the automaker boosting spending on EV production in the US by $1.3 billion. So Toyota there, you can see here, just continuing to advance. It also had an upgrade from Macquarie, but lifting other automakers in turn, Heidi.
And Belle, still ahead, Taiwan's Digital Affairs Minister joins us live to discuss the island's cybersecurity priorities amid a delicate rebalancing of relations between the US and China. But first, the latest on negotiations for a pause in fighting in Gaza with hopes that a deal can be sealed soon. This is Bloomberg.
Hamas responded tonight. We're reviewing that response now, and I'll be discussing it with the government of Israel tomorrow. There's still a lot of work to be done, but we continue to believe that an agreement is possible and indeed essential, and we will continue to work relentlessly to achieve it.
US Secretary of State Antony Blinken there speaking in Doha following a proposal to halt fighting in the Gaza Strip in exchange for the release of some Israeli hostages. Well, Qatar, a key mediator to end the conflict, says Hamas has sent, quote, a positive response for the plan. Bloomberg's Michael Heath is with us for the latest. So it's positive signalling at this point.
Yeah, definitely, Heidi. And you know, Secretary Blinken's in Israel today, so obviously there'll be discussions held there. We're in baby steps, though. I mean, it's obviously much better than them rejecting it, but President Biden was asked to react on it, and though there's no details, he said some of the suggestions were a bit over the top from Hamas. So yes, look, this is early stages, but positive, and obviously those hostages have been held for 4 months now, and the conditions must be fairly awful outside of the suffering of the people in Gaza under the bombing as well. So yeah, I mean, look, whatever happens there, you know, any chance of getting towards a ceasefire is really positive news, and the repercussions of it could be quite significant. I mean, you might see an end to the Houthi attacks on shipping as well, which obviously would be good for the economy, and some of the other militant groups that are supported, that are backed by Iran, are likely to stand down in the meantime as well, because they say all their activities are connected to Hamas. So there's a lot at stake there, but you know, again, we're still at very early stages, and both sides still have, you know, slightly conflicting views of what they want out of that sort of ceasefire. So we'll just have to see how it plays out.
Something that could really perhaps complicate matters, at least from the US side, is what's just happened in the last few minutes, the US House failing to pass this nearly $18 billion funding package for Israel. Does that sort of play into the dynamics at all?
Yeah, well, it's hard to say, Annabelle. I mean, the support for Israel is very strong among the political classes in the US. So, unlike Ukraine, it's hard to see that there will be an issue at the end of the day in Israel receiving its funding and receiving the arms and its supplies. But one of the issues that's been raised is whether the US needs to use a bit more stick and a little less carrot when it comes to dealing with Israel. Obviously, you've had these ministers that have criticised the US, and one of them said that they'd prefer a President Trump to President Biden. And that the US suppliers obviously give it some leverage, but just that general support within the political class means that I don't think that's going to be something that's at stake here. But again, for Prime Minister Netanyahu, just bring it back to the Israeli side, it's kind of complicated. He's got to sort of keep the US on side. He's got some pretty right-wing ministers there who've made some pretty inflammatory comments as well. So in trying to get to this deal, it's going to be, it's going to take all of his skills if he is indeed keen for a deal. There's obviously a lot of differences with the US on how they see things unfolding as well. So yeah, look, we're in, these are important times, and it could be that we're on the verge of something really quite hopeful. But yeah, there's a lot of bits that need to come together.
Yeah, very delicate balancing act. That was Bloomberg's Michael Heath there. And other political stories we're watching as well this morning. President Biden is blaming Donald Trump for sinking a bipartisan bill linking border controls with military aid for Ukraine. The president admitted the Senate package is unlikely to move forward and says he will use the issue against the Republican frontrunner on the campaign trail.
All indications are this bill won't even move forward to the Senate floor. Why? A simple reason. Donald Trump. He'd rather weaponize this issue than actually solve it. So for the last 24 hours, he's done nothing, I'm told, but reach out to Republicans in the House and the Senate and threaten them and try to intimidate them to vote against this proposal. And it looks like they're caving.
A U.S. federal appeals court has rejected Donald Trump's argument for presidential immunity, moving him closer to prosecution for allegedly trying to overturn the 2020 election. The case brought by special counsel Jack Smith's office is one of 4 criminal cases Trump is facing, including a similar election case under state law in Georgia. His campaign says he'll appeal against the D.C. Circuit Court ruling. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Bloomberg subscribers go to DayBig on their terminals. It's also available on mobile in the Bloomberg Anywhere app. You can customize your settings so you only get the news on industries and assets that you care about. This is Bloomberg. You're watching Daybreak Asia, taking a look at some of these big moves today in Wall Street after hours, because it's all about the earnings story and the numbers that came out after the bell today. So some of the big ones we're tracking here. Snap, you can see here, plunging more than 30%. It's really struggling with what's been a slump in the digital advertising market, that social media giant. So that's what's behind that. Disappointing revenue in the holiday quarter. Ford, you can see, moving to the upside here, more than 6%. It posted fourth quarter results that was a very sound beat on expectations, and it's also forecasting higher profits in 2024. That's even though it's actually seeing losses in the EV division and rising labour costs. So good numbers out of Ford. And Yum China, really the standout there as well, up more than 20% in after-hours trade, given it posted numbers that were better than expected for same-store sales, rather. But let's get more on those numbers here. Bring in someone who knows a lot about it, our Bloomberg Intelligence Senior Consumer and Technology Analyst, Catherine Lim. And Catherine, I'm curious, what stood out to you the most in these numbers?
Right. As you've rightfully highlighted, there were many beats. The same-store sales numbers actually came in stronger than what we were looking at. Margins were actually holding up better than what we were looking at, particularly in a quarter whereby we have observed that there were multiple discounts that the company seems to be putting into the market. So overall, I think, it is a great delivery from Yum China in the fourth quarter.
What are some of the likely sort of highlights as you're watching out of Alibaba, particularly as we've seen the share price do quite well in the last couple of sessions?
Right. A couple of things, obviously, I do think that, the consensus numbers which have been cut about 10% in the last 4 months may have been too pessimistic, and there is some upside to the deliveries tonight. Another thing to actually watch out for would be, the share buyback program that the company had in the market. There seems to be room for them to actually upsize it over the next couple of quarters. So these would be some of the highlights that I will be looking at into tonight's results.
Bloomberg Intelligence Senior Consumer and Technology Analyst Catherine Lim there. And of course, we'll be watching Alibaba. We'll also be speaking exclusively a little bit later on with Yum China CEO Joe Watt about their latest earnings and their outlook. That conversation taking place at 10 a.m. in Hong Kong, 1 p.m. if you're watching in Sydney. The top corporate stories that we're following today, and Shanghai-based chipmaker SMIC posted better than expected quarterly profits on robust demand for Huawei's marquee smartphones powered by its components. Net income was just under $175 million in the 3 months ended in December. China's top contract chipmaker is capable of making advanced 7-nanometer chips used in smartphones and laptops. National Australia Bank says Andrew Irvine will replace Ross McEwen as Chief Executive Officer. Irvine has been NAB's Group Executive for Business and Private Banking since 2020. He'll start in the new role on April 2nd, when McEwen will retire from executive roles after more than 4 years in charge.
New York traded shares of UBS fell the most in 11 months, even after it announced a $1 billion buyback. That's after fourth quarter earnings missed estimates. CEO Sergio Motti told us the bank is willing to sacrifice growth in order to improve returns as the merger with Credit Suisse concludes.
Is a pivotal year because if you think about the journey, the first 6 months are very intense. I think we're going to go through the merger of the two operating entity, UBS and Credit Suisse AG, will merge in the first half of the year. The subsidiaries in the US and Switzerland will merge also during 2024. So this is the prerequisite to be able to realize our synergies. We already achieved $4 billion of cost savings, exit rate 2023. We now plan to have another gross savings of $9 billion between 2024 and 2026. Partially, this will be reinvested in the business to make our platform more resilient and up to speed with the requirements, but also to invest in our future.
So, Sergio, how important was this investor update just to give a blueprint of the kind of growth that you want to attain and how?
I think it's very important for investors to understand how we are connecting the dots between what we said in summer last year and in respect of our long-term plans, in 2026 plans and going beyond that. So today we are providing few dots between 2024 and 2026, how we achieve cost savings, how we manage our balance sheet, how we want to manage growth that has to come in a sustainable way. And also, we give also some indications about what to look forward after the completion of the restructuring, which is then going to enable us to harvest, the work, and we did with a quite attractive returns.
UBS CEO Sergio Motti speaking to Bloomberg's Francine Lacqua there in Zurich. Let's take a look at how futures in Europe are opening up in the session. This is a picture, of course, across European futures as we see the Euro Stoxx 50 looking modestly higher there. We are seeing German DAX futures a little bit on the softer side there. European stocks did gain in the previous session. Investors kind of picking up really the thematics coming through from earnings, winners and losers, and also, of course, assessing that path forward for rates. We saw, in particular, the likes of BP rallying on the earnings beat. UBS, we were just speaking to Sergio Motti, slipping a little bit with the outperformance really in that energy sector. Plenty more to come here on Daybreak Asia. This is Bloomberg. taking a look across Asian markets as we get into half an hour of trading in some of these major markets, including Japan and Tokyo, and an hour and a half into the start of trading here in Sydney. Now, the Nikkei 225 is down by just about 0.5%. Really a fluctuating session. We're seeing that retreat from tech. Some earnings support coming through for select earnings affected stories that we can see, but the broader topics is virtually unchanged. The Nikkei, though, seeing a bit of a decline. We're also seeing a bit of a rebound when it comes to the yen as well, after it hit its weakest level since late November earlier in the week. When it comes to the topics, the tech is really the biggest sector seeing that drag. A different picture across Korean stocks. We're seeing the cost be broadly higher by over 1%. This after we had a bit of a pullback. Of course, the best weekly gain since 2020, seeing a little bit of profit taking, but we're back to gains today when it comes to trading in Korea. Here in Australia, it is broadly a pretty optimistic session, about 0.6% higher. A couple of laggards, communication services and consumer discretionary, seeing some weakness, but we're seeing some very strong gains from the likes of real estate, as well as some of the big miners and utilities and energy names here as well. Kiwi stocks just modestly higher as we see a pretty positive session so far across the Asia Pacific. Taking a look at really some of the big movers so far in this session, and particularly we've been talking about the impact, of course, of earnings across Japan in particular. Daikon is one to watch as we see in this session. A bit of a move to the downside. Third quarter operating income missing estimates there. The inventory really seen as a drag on profit progress. We're watching Toyota there, and that is really just a big story for Japan today. We're seeing Toyota up by over 5%, with the market value topping 50 trillion yen for the first time. And of course, we're watching Mitsubishi there as well, up by close to 10% in the session bell.
Yeah, certainly a lot of movers in the session today. But let's shift gear now to Taiwan, because 3 weeks since the island held its presidential elections, it's been left with just 12 diplomatic allies, accounting for around 0.17% of the global economy. Reuters is now reporting that Taiwan's most economically powerful diplomatic partner, Guatemala, is considering formal trade ties with China. Beijing, as we know, has been peeling off Taipei's allies for years as it ramps up economic and diplomatic pressure on the island. So here to discuss some of the challenges and how Taiwan is grappling with threats in cybersecurity is Audrey Tang, Taiwan's Minister of Digital Affairs. And as we said, just really not too long after Lai Ching-te's victory, it's probably not a result that Beijing wanted to see. But as we count down to his inauguration, I'm curious, when you look at your portfolio, what are the priorities that are really standing out to you?
Thank you. I think for this year, we need to make sure that everyday people have the ability to understand and direct AI's role in their lives. In particular, because our election proved that with pre-bunking and with collaboration with civil society, we can overcome deepfakes and information manipulation challenges. So we look forward to continue this strong partnership also with our democratic allies that are going to have elections this year.
Talk us through more some of what you see in terms of deepfakes. Was that an issue that cropped up significantly across the course of the election campaign?
Yes, according to our domestic, like AI Labs Taiwan and DoubleThink Labs, what deepfake technology and generative AI in general was able to do is to put a single narrative, but instead of like obviously astroturfing, repeating the same talking points and so on, to paraphrase it so that it looks like organic. It looks like, 10,000 different accounts telling 10,000 different life stories, all echoing the same point. So I would say that it massively lowered the cost to do information manipulation at scale.
Minister, following the election, ahead of the inauguration and beyond, are you seeing tactics and strategies and threats changing or evolving at all? What in particular are you seeing from overseas threats?
Yeah, so in terms of pre-bunking against the information manipulation threats, it is essential to distill the messages that the adversaries are spreading. Mostly what we've been hearing around the election time is to cast a doubt toward the election results or cast doubt around democratic institutions in general. The main idea of the adversaries' talking points is essentially that democracy only leads to chaos and polarization and mutual hate and whatever. And our pre-bunking worked because we have seen that after the election, people in general trusted our democratic institution more and also trusted each other more. So we've seen the messages evolving toward just highlighting the divisions between the parties, between the different ideologies, and so on. But so far, they are having little effect.
You've talked in the past in conversations with us about the need, internally for you to turn conflicts into creation. In terms of the creation of new strategies to be able to future-proof Taiwan, communications is one of them, right? The threat of cutting off Taiwan from communications. Can you tell us more about efforts that might be being made and progress being made on that front?
Yeah, I believe you're referring to our idea of local communication resilience. A year or so ago, the two subsea cables between our Matsu Island and Taiwan proper was cut, both of them, accidentally, quote unquote, by cargo and fishing vessels flying the PRC flag. It's what's known as gray zone operations. So we've been deploying not just satellite connectivity and microwave, but also with the three public cloud providers, so that hopefully by the end of this year, the video conferencing and so on, all the essential infrastructures can be routed entirely domestically, so that even when our subsea cables connecting Taiwan to the world are hindered or jammed, our domestic communications can flow naturally, and then we can reserve the satellite bandwidth to the international correspondents.
Annabelle mentioned deepfakes, and you've talked about the threat to information integrity that comes from technology like deepfakes. What about AI? What do you think is the right approach? And equally, do you see it as a threat or an opportunity? I assume both. What's your sort of strategy to that?
Yeah, so our main idea is a collective alignment of AI, meaning, for example, for the past year, for 12 months now, I've been training my local models using my email correspondences and so on. So it drafts, but it doesn't send my email correspondences and so on. The advantage of such local models and local tuning is that it opens up AI to everyday people as not a black box that's tuned by somebody else, but rather anyone can use their own data to ensure the accuracy and the fairness and so on. So through like the Collective Intelligence Project, we've worked with top labs like Anthropic and proved that with a democratic conversation to co-create a constitution document for AI, such collectively aligned AI is equally capable, but far less biased, far less discriminatory, and so on, more fitting to the local norms. So we're looking to systemize this kind of processes so that any community, any enterprise, any groups, and so on can freely tune the AIs to their liking and therefore have their hands on the steering wheel, so to speak.
You are quite big on open source AI. Do you see any sort of risks associated with that?
Well, open source in cybersecurity only works if the entire supply chain adhere to the vulnerability discovery and threat intelligence and indicator sharing frameworks and so on. So there are standard cybersecurity practices that safeguards the entire supply chain of open source ecosystem. So what's important is that we need to democratize access to this kind of testing, verification, assurance systems. And Taiwan has just set up the AI Evaluation Center to not centralize this testing capability, but rather democratize this testing and verification and red teaming capability so that everyday citizen can also help to look at emerging threats and also possible mitigations collectively.
You've talked about 2024 as being, I guess, a deadline for Taiwan needing to bolster its defences. Are you comfortable in being able to meet that deadline? And where do you, I suppose, see the vulnerabilities within either the government sectors or corporate Taiwan as being the most susceptible to outside attack?
Yeah, I'm happy to report that in addition to our satellite alliances with our partners, for example, OneWeb from UK and SES from Europe, and the 3 public cloud operators that we just alluded to, we have also received a lot of friendship and collaboration from the international open source community. The open source community that want to use their technology not just to safeguard software, but also safeguard, as you mentioned, information integrity, contextual integrity, to work on contextualization engines such as the community nodes on x.com. That's one open source software that we're bringing to more platforms and so on. I think that is very heartening, so that safeguarding Taiwan's democracy also pays dividends to safeguard other democracies as well, because the software components are reusable.
Minister, really great to have you with us. We appreciate your time. Audrey Tang, Taiwanese Minister for Digital Affairs. You can watch us live and see our past interviews on our interactive TV function. That's TV Go. You can also dive into any of the securities or the Bloomberg functions we talk about. You can join in on the conversation, send us instant messages during our shows. This is for Bloomberg subscribers only. Do check it out. It is at TV Go. This is Bloomberg. DBS has reported fourth quarter profit that missed expectations amid signs of pressure on margins. The lender's CEO, Piyush Gupta, is also facing a big pay cut after a spate of digital banking outages last year. Let's take a look at these earnings. Bloomberg Intelligence senior analyst Sarah Jane Mahmood joins us now. So what was the biggest drag?
Hi there. So, DBS reported a very good set of results, actually, for the full year of 2023, with profit growing 25% to record levels last year, chiefly off the back of the Fed rate hikes. Although, as you mentioned, it did post lower than expected profit growth in the fourth quarter, chiefly due to slight margin compression, weaker than expected loan growth, and seasonally slower fee income as well. Now, last year we saw net interest margin expand by around 65 basis points, but lending activity was relatively slow at around 1%. And without the acquisition of Citigroup's retail assets in Taiwan, DBS would actually have seen its loan book contract last year. As you mentioned, its management team have actually taken a bonus pay cut on average of 21%, with the CEO taking cut of a larger figure, 30%, in wake of the couple of years or so of digital outages that the bank has been suffering and the ongoing regulatory probe into that at the moment.
DBS is the first of major Singapore banks to report results. We'll have other peers, UOB, OCBC, later in the month. Does that pressure on margins, is that likely to translate to the other lenders, do you think?
Yeah, I think margin has definitely hit its peak for the Singapore banks, but it's quite interesting with DBS. We expect, and management expects as well, that net interest income growth could hover around similar levels in 2024 or decline just modestly because of the Fed rate cuts, which could come as early as March. But in DBS's case, the negative impact of this could potentially be offset because of its acquisition of Citigroup's retail assets in Taiwan and the boost in lending and wealth fees that it's likely to gain over there. I think loan growth in Singapore as well
Continue.
Sorry. Loan growth has been relatively weak, though I think the Singapore lenders are likely to see it pick up a little bit more this year as sentiment improves slightly. And I think it's quite important to note as well that DBS is likely to see further growth in its wealth business this year on tailwinds from a 23% rise in assets under management last year, and also leveraging new regulations around family offices in the city-state.
Well, we'll be, of course, tracking DBS when it comes online with Singapore starting trade at the top of the hour. That was our Bloomberg Intelligence Senior Analyst of South and Southeast Asian Banks and Regulation, Sarah Jane Mahmood there. Let's take a look at where we're at in the session today with the IMAP function. You can see here we're posting gains for the broader index, up around 0.8% at this point in time. Pretty broad-based as well, because you've got every single sector in the green so far, with the exception of consumer staples. What's interesting is, to the flip side, consumer discretionary is leading the gain so far, up 1.5%. But if you were to dive into that, you'd see there's really one name that's standing out in particular today, and that's Toyota, because we are extending gains for that stock. Toyota has already crossed the 50 trillion yen market cap mark. But as well, we also had those earnings out after the bell, and we saw the stock jumping the most since November of last year, but they've boosted their full-year operating outlook. So it's a really very rosy outlook for Toyota there, Heidi.
Yeah, we do have a little bit more corporate news breaking here in Australia, Belle. You know, we've been focused on these ongoing merger talks between Santos and Woodside Energy in Australia over that potential combination. Woodside now confirming that they've ceased talks on that potential merger with Santos, saying that these talks have concluded in a regulatory filing. They've ceased discussions regarding a potential merger with Santos. They will be continuously assessing organic and inorganic growth opportunities. The CEO, Megan Neal, saying that they've done their thorough due diligence. They will only pursue a transaction that is value accretive for shareholders, and these talks have stopped. It was sort of towards the end of January that we heard from Santos that these talks were still continuing, sort of these alternative options to try and increase value, but these negotiations have now come to an end, Belle.
Yeah, well, actually, still on the M&A front, we know that the Japanese company or parent of the world's biggest convenience store chain, 7-Eleven, is making a case for worldwide growth, and some of that could actually be through acquisitions. But we heard from the CEO, Reiichi Osaka, who spoke to us exclusively about plans to expand in the US, where the brand began a century ago.
小型店ですから、常に
As a small store, you must constantly change your product mix to meet changing customer needs. If a large store has a certain range of products, it can respond to changes in customer needs with its overall product mix. However, a small store will only carry about 3,000 stock-keeping units. Therefore, we need to be sensitive to changes in seasons, times, and demographics. In this sense, we are the industry that must continue to adapt to change in order to grow.
Clearly, this model, the Japanese model, the convenience store, works in other Asian countries and regions. I've been to them in Hong Kong, in Thailand, in Taiwan. They work. What about further afield? The United States is very familiar, obviously, with 7-Eleven brand, but it's different. It feels differently when you walk into a 7-Eleven in the United States. What is your main priority when thinking about expanding in a place like the United States?
We are
now focusing on fresh food products in the U.S. market. We are in the process of building a system to supply fresh, high-quality products to stores, while working together with our Japanese supplier, Warabe Nichiro, to build a factory over there and develop products together. We believe that we need to change our business model from one that relies on gasoline and cigarettes to one in which customers choose us based on our products. The key to this change is fresh food.
Do you have a store number goal for the United States? I heard it was going to be maybe 20,000 stores, of course, after the Speedway purchase, 9,000 stores plus 4,000 for Speedway, and your goal was 20,000. Is that a reasonable goal, and by when?
I think there are more opportunities, but we're not targeting concrete numbers at this time. Unlike Japan, the U.S. market is very segmented. The U.S. has about 150,000 convenience stores, and the top 10 account for only 19% of the market. Therefore, we would like to expand the number of stores while improving the efficiency of chain operations as much as possible, and proactively developing M&A if other companies would like to work with us.
The minority shareholders would like to see perhaps a spin-off of your local supermarket chain, Ito Yokodo, and to unleash the true power and your true asset of the 7-Eleven brand. Can you give us an update on whether you are thinking about what Value Act Capital, which is a 4.4% minority shareholder, but very much of an activist investor, would like to see you make structural changes? Is it something that you're considering within the next 5 years or so to spin off perhaps your most valuable asset, 7-Eleven?
We have certainly received such comments from many of our shareholders, not limited to Value Act. But what we are explaining is that if we are to transfer the growth of 7-Eleven Japan to the rest of the world, we must transfer the success of 7-Eleven Japan's food business as well. If we simply increase the number of stores, we will be building a tower on a very weak foundation.
That was the 7&i Holdings CEO speaking exclusively with Bloomberg's Stephen Engel there, and just taking a look at the market movers today so far. 7&i Holdings fairly steady right now, but some big moves elsewhere, and Lawson is really standing out to us here. So this is another convenience store chain in Japan here, but essentially we've got the telco company KDDI and also the trading house Mitsubishi that are taking Lawson private. So they're really seeking to accelerate efforts to digitize the business. KDDI, it already owns a share in Lawson, and it's offering a tender offer for 50% of the retailer. The proposal is worth $3.3 billion. So that's what we're watching there. Mitsubishi as well, gaining on very strong third quarter results. This is Bloomberg. So far in the session, Toyota is actually leading the consumer discretionary index higher in the session today, and that is again what's leading the gains so far for Asian equities that are around 0.5% to the upside at this point. Toyota standing out to us because we had those numbers due yesterday around noon, and they showed very strong outlook for the company here. So we saw its market cap surpassing 50 trillion yen for the first time ever. Again, it was that upward revision to its full-year profit guidance that really stood out to us. But shares, really, they're up more than 60% over the past back of the year. Strong sales and a weaker yen also playing into that, even though we actually have seen those recent issues surrounding certification and testing of vehicles by affiliates. That's raised some concerns. But investors continuing to pile into this, and there's optimism generally around Japanese equities in turn. But that's it from Daybreak Asia. Our market coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. Stand by for Bloomberg Markets China Open.
Now, women on average have about a 30% lower, I guess, amount of money saved up for retirement compared to men.
Yes.
So what are you doing about that?
Yeah, so we launched a campaign called Retire Inequality. And we do know that women retire with 30% less. Women make 83 cents on the dollar. And so there's a couple of things that we're doing. One, it's having this conversation and making sure that we all are aware that there is a gap. By the way, women live longer than men, so longevity risk is a real factor. Secondly, it's about making sure that we are talking to women about what can you do differently. And so whether that's negotiating pay and what are some tools that are out there, making sure that you take the time to negotiate, because we know women do not negotiate as much as men, which puts you at a disadvantage to start. But then also along the way, making sure that women are securing their own retirement, and that as part of their retirement plan, we're having much more conversation around guaranteed income as well. And so ensuring that we understand what are the nuances for women. If you think about COVID, 2 million women exited the workforce. They did not continue to contribute to their 401k or 403b plan. And so how do we make sure, as a matter of policy, as a matter of engagement, that women can have an opportunity to catch up, that women can understand that if you exited the workforce and now you're back, that that's 2 years of compounding that you were not able to take advantage of, and how do we continue to make sure that we're educating them and giving the tools that they need to get back on track.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.